Hi, and welcome to video 5 of the Financial Foundations course. And it's about to get real very fast in here because we are really going to dive into budgeting. So, we are really going to start evaluating how to look at our expenses and income every month and figure out ways to reduce or cut back or increase income or whatever, but making sure it's in balance. This is going to be the first step into very action oriented tactics that you can take at home and create that budget for yourself. It's really going to depend on what you prefer and how you prefer to budget. But what I'm going to do today is show you the options available to you and then give you some tactics that you can take from here to test out the solution that's best for you. I can't wait to get started. Let's go. All right, this is very exciting. We're going to get into specific budgeting tactics in this video. I'm Thinking Cap Financial. My name is Ryan DeRusso. I'm a fee-only financial advisor, and I work primarily with private practice owners and the self-employed. And thank you for joining me here. And so, what we were going to cover today are the practical steps involved in creating a budget. So, what you need in place, and then the steps to do so. The different types of budgeting techniques available to use, there's many different ones. And so, we want to know what they are, what's available to you, and then you can sort of select which one works with your lifestyle, your personality, all of that. We want to talk about the importance of identifying fixed expenses because it's the one thing in all the budgeting techniques that is consistent, is understanding the fixed expenses. So we need to recognize those. We want to choose the best solution for you. So I'll give you some ideas on how you can think about that. And then I'm also going to introduce to you my preferred method of budgeting, which is called flow-based budgeting. And I'll talk a little bit about why once we get there. Before we start, make sure to follow that newsletter, thinkingcapfinancial.com/newsletter. I'll provide some tips and advice that you can't get in the videos. YouTube, I'm at Thinking Solo. LinkedIn, I'm at Ryan DeRusso. That's my name. Make sure to share this course. We are building wealth in the private practice space together. You all deserve to be paid for what you do and deserve to reach life goals that you have. And this is just one of those steps in that process. Beware, this is the most important video in the series, so make sure to watch it. And then my suggestion, as always, watch it 2x speed because I sound a lot better, it goes a lot faster, and then you can always go back and listen if needed. All right, let's get into the budgeting basics. So one thing to think about is, what do we want to achieve when we're budgeting? And one thing I like to figure out is a purpose for every single dollar that comes in. And so therefore, what we are taking is that income that we have received from the private practice minus all the expenses that we have, plus the savings that we have for long-term purposes. And what the goal of that is to equal $0. Essentially, there's a budgeting tactic called zero-based budgeting, in which this is the essential goal is to have $0. But I actually think that should be a goal for any type of budgeting because we want to put every dollar to a purpose. And if we're not assigning things to, like, say, savings at the upfront, then it's never going to have that place in our budget on a regular basis. And so it becomes forgotten. And so, but if we can create everything down to $0, then every dollar has that purpose. So what do we need in place in order to begin budgeting? First, we need that list of income that we created in course 3. We need the list of expenses that we created in course 4 and course 3 and course 4. And then we need the right tactic. And that's what we're really going to dig into today. So these are the various types of budgeting tactics that I typically come across. How you use these, why you use these, it's going to vary by personality. It's going to vary by sort of your money mindset and all those sorts of things. But instead, I want to give you a general understanding of these different tools and different options. And then what I'm going to do in this video, as well as more importantly in the next video, I'm going to go deep into that flow-based budgeting, which is the last one mentioned here. So first budgeting technique is the 50-20-30 budget. So in this technique, what happens is 50% of your income goes to your needs, whatever those are. 20% goes to savings, and 30% goes to wants. So if you are making, $5,000 a year, half of that, or $5,000 a month, half of that goes to the needs. That would be the rent, the auto loans, all those sorts of things. So 2,500 there, and then 20% to savings. What's 20% of 5,000? Maybe I think it's about $800 would go to savings, and then the rest to wants. The one thing I really like about this is it really encourages a high savings rate. If you're putting 20% towards savings, you're doing a wonderful job in terms of moving money towards savings. The problem is it can be very strict. If you're putting 50% to needs, 30% to wants, 20% to savings, it doesn't have much room for leeway. Meanwhile, if you have 15% towards savings, that's pretty good. And that could be a great way to start. And so it can be a little less room for maneuver there. And so it's why I think I tend to see people kind of move away from it eventually. It may help work for a few months, but then something happens and it kind of gets taken away. It's not also accounting for like non-monthly costs. So the things that pop up every once in a while that we're surprised by or whatever, but they happen every single year. And so that's the other issue at hand, because when those pop up, well, where does it fit within the 50-20-30 framework? It's really hard to tell. And so that is the downside to it. But again, if you like this hard sort of set numbers to each individual sort of area of your asset or your income statement or balance sheet, then that's a great way to manage your budget in that sense. Zero-based budgeting is where we assign every single dollar for a purpose. This, in my opinion, should be the goal of every budgeting technique. So one thing I don't particularly love about zero-based budgeting is that it is essentially, doing what all budgeting techniques should do. The other thing that kind of holds me back on the zero-based budgeting is essentially what we're doing is every dollar has a purpose. And so we have to know every single line item that we have, from the way we're spending at restaurants to shopping to, parking and tolls and those sort of things. I mean, it creates a situation where we have to keep a very close eye on every single expense line. That's going to be burdensome at some point. We're going to have so many expenses and not enough time to really do that evaluation. And we want to move away from that if possible. And so that what I find is the zero-based budgeting in theory is a good idea. We want to get it, every dollar for a purpose. It just may be a little overbearing for a lot of folks. The envelope method is actually a tactic that's really good if you're having big debt issues. If you are an overspender or something like that, we can use the envelope method to make sure you're not overspending or anything like that. There's essentially what happens is we have certain things that we're going to spend money on each month, say the mortgage, food, groceries, whatever, and we decide how much money is going to go towards that. So, $2,000 to the mortgage, $500 to groceries, $300 to restaurants, $20 for sandals, $100 for the spa, whatever. And then we actually go a step further, in which we take out cash and put the cash in envelopes, or use sort of prepaid cards or something like that. Some people also use. I hesitate towards the prepaid cards for just in case they get lost or they expire, that sort of thing. And there can also be some fees on them, so I hesitate towards that. But nonetheless, they can work. And then you put that in the envelope so $2,000 in the rent envelope, and $500 in the grocery envelope, and then you spend that money throughout the month. And once that money is spent in that envelope, nothing else can be spent on that category. It can get people into that real frame of mind of budgeting, so it can be very, very helpful. It also creates a tangible action. The problem is now so many people do not use cash on a regular basis, and the other thing is we're not really tracking things. So if we borrow here, borrow here, borrow here, borrow here, it can all get convoluted and into one. So I like it for people who are really struggling with debt and are overspending and trying to get to that initial state of budgeting correctly and keeping parameters for themselves. But eventually, I think we need to move beyond that, and most people will need to move beyond that. But again, good way to get started. Profit first is another way to budget. It's become a popular way to budget in the private practice space, especially with how we evaluate the business. What happens is you pay your savings and income with that first paycheck, and then everything else goes to expenses. So you're kind of putting yourself first in the equation. What I find in this is that it's a little simplistic, and what happens is you have to open up a lot of bank accounts in order to funnel money in correctly, and that can get overbearing. And so it can be good. You know, I think any budgeting should be accounting for your income from the get-go, and it shouldn't be like ignoring that at any point. But for certain people who are constantly putting themselves second, like potentially therapists who are very empathetic in nature, then it can be a good way to kind of correct that mindset where you need to be paid from the get-go, and you need to put your purpose first and your needs first. And so this method is really good for that. You put your needs and your things that you want first. Flow-based budgeting is my preferred method. And so in flow-based budgeting, what we're doing is we're breaking out expenses into three categories: fixed, flex, and non-monthly costs. Within the fixed costs, every month we know how much is going to go towards those fixed costs. Within the non-monthly costs, what we do is we create a non-monthly cost budget for the entire year. So if we're going to go on 2 trips a year, have 3 vet bills, you're going to give like $2,000 in gifts in a year. We then break that down, those costs down into a monthly cost. And so every paycheck we have a certain amount flowing to the fixed cost, a certain amount flowing to the non-monthly cost, and whatever left is the flex cost, or essentially the variable cost. So this could be needs like groceries. It could also be wants like entertainment, restaurants, those sorts of things. And the value of this is, instead of going line by line, once we've done the initial budget, we can look at top level. Are we keeping our expenses correct on the fixed cost line? Are we keeping our expenses correct on the non-monthly cost line? And therefore, are we good on the flex cost? And if it's not good, well, have we made an error in terms of how much income is coming in? Or do we need to adjust the budgeting a little bit so we're properly accounting for everything that we need to account for? And so I find this very valuable from my perspective. One, because it's easier to talk to clients about their individual spending. We all spend differently. It's not taking a judgment call on that. But more importantly, I find it to be a very easy way to go month to month, because we're accounting for everything that could come up, surprises, as well as the things that we know are going to come up month to month. And there's value in that. Every budgeting strategy requires your fixed costs. That is one thing I don't know if you noticed as we were going through each of those budgeting tactics, whether it's the 50, 20, 30, whether it's the envelope method, whether it's profit first. We need to understand those fixed costs, because that's what's going to be absolutely taken away from income. We know that set amount. And the more defined we keep that fixed cost number, the better off we'll be. When in the next video, when I talk about flow-based budgeting in more detail, what I'm going to talk about is actually opening up a separate bank account for fixed costs. So maybe within your short-term checking account, that's going to cover your fixed costs. And so we know exactly how much is going to go out of that account every single month. So when we bring in income from the private practice to that personal account, we're going to put that specific number into that that checking account. So as things go out throughout the course of the month, we know exactly why it's going out. And we can't do that unless we know the fixed costs. But also within that, because we can create such balance within the fixed cost dynamic, that's where we can also incorporate savings. So we know we're putting that savings towards our long-term goals every single month. We essentially drill it in as a fixed cost, and it's not even really looked at or considered spendable money because we know it's going to immediately go out of that one account. What you need to do to pick the right tactic for you is really trial and error. You need to say, okay, I'm going to try this tactic, whichever one kind of appeals to you the most, and then try it out for a month or two and see what you like, what you don't like about it. And I'm not saying necessarily that it depends on the person, but you don't necessarily need to say, this is my budget and I'm going to check it every, twice a day, every day, make sure every time I spend, I'm keeping the budget intact. Instead, we want to create a flow where we're kind of checking on it maybe once a week, twice a week. So we know we're in line and we're within the parameters of things, but we're not constantly being overburdened by the idea of the budget because we don't want to lose momentum in this process. And in that process, if it becomes too burdensome, if it becomes overwhelming, then maybe it's a different tactic that we need to try. Or if it's not working at all, maybe we need something that's a little more burdensome. And so we need to try a different tactic for that purpose. You need to commit to a budget eventually. Budgeting is not like the fun exercise of financial planning. Instead, it's something that we have to do in order to achieve other things. We have to learn this before we can achieve like bigger things. And so eventually you're gonna have to commit to the budgeting technique that works best for you, and even if it's not always 100%, as long as we are getting close to the mark and getting close to that $0 every month, then we're doing something really good long term. And so, take the wins for what they are, take the losses for what they are, and just move on and continue those efforts. And if it becomes a thing where you've forgotten it 3-4 months, then come back, figure out one that might work better for you. Again, there's no right or wrong answer. It's just the one that's going to work best for you. And there's no perfect solution out there as much as people want to build one as. Instead, it's just sort of, as I said in the first video, personal finance is doing the continuous small steps continuously, and budgeting is essentially that. And so there's no perfect solution, but it's the one that's the least burdensome for you and the most effective. And in the video notes, you will see a model budget and sort of show what that looks like. I'm going to be using the flow-based method, but you can kind of see more clearly what that looks like when we're laying it all out in that perspective. So a recap for what we just did in this video is, one, we want to give your money a job. We want to know where every dollar is going as it moves from the business account to the personal account. So make sure it has a purpose. Go through those tactics again. I would encourage you to listen to that portion of the video again, just so you can kind of see and visualize the differences of the different budgets. And then within the video notes, I have a deeper outline of each type of budgeting tactic. And so then you can go into there and decide which one you want to try first. Again, it's not something that's immediately going to click, or you're necessarily going to try one and it works 100% of the time, but you just want to commit to one that really feels most right to you, feels most like the way you want to spend and how you spend, that sort of thing. And then that will help determine where you can cut expenses as well to get the budget down to that perfect dynamic where the amount of income coming in has a purpose and the amount going out is equal. Again, know those fixed costs. The more you can get that down to a very specific number each month is going to be so important. And then in the next video, we're really going to delve into the flow-based budgeting technique. I'm going to give you access to a tool that you can use for your own budgeting purposes. And so the more you do that, the more you view that, the more I think you'll get an understanding of what I'm trying to get at and why I like it so much. But essentially it is the one that I find to be the most forgiving and also the most adjustable. And so that's really what I like about it. But that's for the next video. For now, make sure to follow that newsletter, thinkingcapfinancial.com/newsletter, and then please send that testimonial to thinkingcapfinancial.com/testimonials. There's clear guidance in how to upload one. And if you leave one, then you can win a prize. Again, next video, we're going to get into flow-based budgeting more deeply. I'm going to show you a demo and actually do a budgeting for you. So I can't wait to show you. Let's go.